Hello everyone, welcome to episode 47. Today we're going to be talking about MMF V2. MMF announced a major change to the Cronos. But also on the other side, Crypto.com have also said that there's going to be a Cronos 2.0 or there's a change coming out of beta on 30th September. They're announcing a roadmap. So I thought I'll combine both and make a video about it. So as usual, disclaimer and warning, I'm not a financial advisor. None of my videos are for an investment advice perspective. They're just to share my learnings and explain the process of how to do it. And most importantly, never ever trust someone who calls himself as a professional broker or investment advisor asking you to invest your money with them. It's never safe to invest your money with the third party. Always, your money you invest it, especially in crypto perspective. And I don't have any Telegram groups or WhatsApp groups, but I'm pretty active on Twitter. Chennai to London is my handle. You can follow me pretty easily. If you open a Twitter account, you'll probably get the fastest information in crypto and in blockchain space in general. On Twitter, because that's a good source of information for you. And also, if you have not understood, if you have not got clarity about MMF and Cronos, especially Cronos, in the first, I've been posting about 40 plus episodes. In the first 20 episodes, I've focused on the basics of cryptocurrency, on the basics of crypto trading, mostly using centralized exchanges, how to trade, what does it actually mean, how do you understand crypto, how do you analyze crypto. Those are things that I've been focusing on my first 20 episodes. And from about episode 22 onwards, I've started explaining about decentralized finance, decentralized wallets, and especially about passive income. During the bear market, you cannot trade that effectively because the market is actually going on a downtrend. During this bear market, when you are holding on to your tokens, how do you make a passive income out of it is what I've been explaining from episode 24 onwards for almost over a year. And if you want to understand DeFi better, these episodes will help you in Ethereum, Binance Smart Chain. I've covered about 6 or 7 L1 blockchains and also the Polygon blockchain. So these are episodes that will help you, especially Cronos. Those are the episodes that I have mentioned here that will help you to get a basic understanding if you do not have an understanding. So on MMF itself, Finance, MadMex Finance is basically a decentralized exchange and a decentralized finance platform, primarily operating on Cronos. They've also recently launched into Polygon. So I made 2 videos. One is in episode 40, explaining about MMF as a platform. And then when they launched into Polygon, I made a video, but that was only in Tamil. But most of the information about that Polygon launch was there in the social media as well. Now, Cronos as a EVM enabled blockchain is supported by Crypto.com, and CRO is their main native gas tokens. So coming to Cronos 2.0, in episode 21, almost more than a year and a half back in last year, beginning of last year, we spoke about the roadmap of Crypto.com. At that point, they had just announced the launch of their L1 mainnet. So not many L1 blockchains were there at that point, and these are the main events that have happened from the point that they launched. So in March 2021, they launched the Crypto.org chain, which was the first L1 chain that was built on Cosmos. And in November 2021, they launched Cronos, which was the first EVM capable chain, which means till then it was just a normal blockchain, like a Bitcoin chain, for example, which wasn't capable of executing smart contracts. In November 2021, they launched Cronos, which was the first EVM enabled chain, and it was in beta at that point of time. So EVM enabled, which means that you can execute smart contracts, you can build decentralized applications like text decentralized exchanges or any other smart contract. You can build a game, Web3. All the Web3 utilities can be built on an EVM enabled chain. So that's what happened in November 2021. They launched their first Cronos chain. And immediately came their decentralized exchange, was VVS Finance, very, very simple finance, built on Cronos. And then in January 2022, several applications started coming up into Cronos about 2 or 3 months later. And it was the first EVM compatible chain that was built on the Cosmos network, which is also called as the Internet of Blockchains. We will talk about Cosmos briefly a bit later. But it was still in beta for about 11 months. In the last 11 months from November 2021 till now, September 2022, it's been in beta. So this week, Crypto.com tweeted about moving out of beta. There's not much clarity, but they've just said that the roadmap is going to be scheduled for 30th of September. And here are some key highlights that I've just collected and just wanted to present. And also some of this is speculation. So the full roadmap is expected obviously on the 30th of September. I'm quite excited to know what is ahead for Cronos. And so far in the last 9 months, 50 million transactions have been executed. 300 decentralized applications have been built on Cronos, which is no joke for a brand new L1 chain to have 300 decentralized applications built and surviving in Cronos. 1 million people have started using it, using a DeFi wallet. But obviously, a lot of people could have a zero balance in this, so it's not a true factor. And what are the features expected? One of them that they've highlighted is the cross-chain IBC bridge. So we will again specifically talk about why that is important. There are 9 Cronos funded cohort projects. It's like an accelerator funding, like Binance Accelerator program. It's a cohort funding, which is like a Cronos funded program, which could get up to $300,000 from Cronos. And the demo day is on 30th September. So there are 9 projects. The first cohort one is coming up with a demo on the 30th September. And a lot of them are actually Web3 gaming. There's some unique applications like bubble wraps and so on. But I haven't gone into the details of this application. That's probably a separate video. Potential use cases for CRO, like you could have new web wallets like Kepler wallet, for example, being supported. It could be possible with Cronos 2.0 is what I expect. There's some of it, like these are the last point is a speculation, for example. Why is it important? Why is Cronos 2.0 important? Because some student who's studying for the exam, just when the exam comes, or a student who's been studying throughout the year, and then when the exam comes, he naturally performs better. So like that, projects that have succeeded previously were projects that were being built and developed during a bear market. So for example, if you see the projects that succeeded in 2020, they were all building for almost 2-3 years during the bear market of 2018 and 2019. And eventually when the bull market came, they were very successful because they've been slowly building over the period of time. So that is what is important, that teams should continue to build, continue to develop, continue to invest effort and energy during that point of time. And Crypto.com is very much doing it with the Cronos 2.0 and the roadmap ahead. And carefully they have reduced their CRO rewards, unsustainable CRO rewards on the centralized exchange like the Crypto.com mobile app, the exchange, the Visa. These were all programs that were built to bring people into the Crypto.com domain. And when they reduced the rewards, which was not sustainable, and rightly so, they had slowly started reducing it. It almost caused the price of CRO to crash. But all this was necessary to move Crypto.com into the Cronos. And why move it into Cronos? Because that's going to be the future. Centralized exchanges are probably going to be playing a smaller and smaller role, and everything is going to go into a decentralized exchange or a decentralized finance. That's what is going to happen in Web 3.0, in my opinion. So BNB token is a classic example. So BNB token was for a large part of time, it was only having a utility of the centralized exchange in Binance. And when they launched their smart contract enabled L1 blockchain, Binance Chain, and then Binance Smart Chain, their token value of BNB token went from about $20 to nearly touched about $600 for a brief period of time, then fell back. It's now trading around $300, $280 to $300, which is phenomenal growth for a token which went into from a centralized exchange to a decentralized exchange. That is what CRO almost achieved. When Cronos was launched earlier this year, it went from 10 cents to about 90 cents, which is like 10 rupees to 90 rupees in Indian value. So it's about 800, 900, 800, 900% it increased in value at that point of time. And then again, due to the market conditions and everything, it has slowly fallen down. It's right now it's about 12 cents, 13 cents, I would say 12 cents. So again, with Cronos 2.0, the expectation is that when the bull market comes, this is going to be very, very important for this chain. So now a bit more of speculation. So when Cronos was built, it was first and only EVM compatible chain that was built on the highly talked about Cosmos SDK. So Cosmos is a software development kit that was touted to be the IBC, Internet of Blockchains, or Internet Blockchain Protocol. So the concept was that you can build a network of L1 blockchains. So anybody can build a network of, anybody can build an L1 blockchain, and then it can all talk to each other. So right now, if you take two blockchains like Ethereum and Bitcoin, it cannot talk to each other. Even a EVM compatible chain like an Ethereum and Avalanche, for example, cannot talk to each other because they are completely separate L1 blockchains, and you need to have a portability. And even then, to port an application, it still takes a lot of effort, but it cannot even talk to each other, cannot communicate. So you need a third-party bridge to be able to bridge assets from one blockchain to another. So this is where the Cosmos concept was different, where you can build different L1 blockchains, and today there are several L1 blockchains like Cosmos, Juno, EVMOS, Osmosis, Secret, Akash, and so many other L1 blockchains, which have all been doing tremendously great things on the L1 network and on Cosmos. But they are all interconnected. Like you can transfer easily between these networks, L1 networks, because they are all built using a infinite top blockchain concept, which means that they can be bridged together. But Cronos, being an early mover, it was built on the Cosmos SDK, but it doesn't have a direct IBC bridge. You have to still go through the crypto.org chain, which is the non-EVM enabled chain. So there is no IBC bridge between Cronos and these other great L1 chains built on Cosmos. So an IBC bridge, a live IBC bridge that allows you to move funds between Cronos directly to these other L1 blockchains would be great. And I think that is what Cronos is going to come up with, and I'm highly expecting that, because then it will be easier for me to move some of my assets from the Cosmos network in connect to Kepler wallet, for example, and bridge between MetaMask and Kepler. There's so many other things that are possible. Token burn, CRO token burning, could be made possible. There hasn't been any talk about it so far. I was expecting it in Cronos beta, but again, now coming out of beta, there could be a possibility like what Binance has done using BNB, about reducing supply and making CRO deflationary. Once they start burning tokens and making CRO deflationary, that could also help in increasing the price of the token drastically. And more marketing, now they're coming out of beta. You don't want to market a product calling it as beta. So now that they're coming out of beta and this is going to be full-fledged Cronos functionality, Crypto.com is known for their marketing, and they could be marketing Cronos in all of the events. And this could attract more people to the decentralized finance in general, and more liquidity, more trade volume. All of this means more revenue for the chain and more passive income and stability. So these are the things that I'm expecting. But the big elephant in the room for Cronos at the moment is the gas fees. So when Cronos was launched in earlier this year, or when last year comparably, the gas fees on the transactions on L1 was very high in Ethereum, and when Cronos was launched, it was very, very cheap compared to Ethereum, and was comparable to most of the other L1 blockchains at that point. So if you compared Cronos, I even made a video about comparing the Cronos gas fees at the launch to Binance Smart Chains and other chains. And it was about 50 cents to start with, 40 or 50 rupees. Compared to Ethereum blockchain, where a single transaction could cost up to $100, $50 at that point of time, this drastic reduction was like 100 times reduction of gas fees was phenomenal at that point. But it hasn't improved over the last 10 or 11 months, where the other L1 blockchains have gone drastically forward in terms of what they could achieve with the gas fees. So today, most of the competing L1 blockchains like Binance Smart Chain, for example, they've reduced the gas fees massively, where you can get most transactions done with like 10 cents, for example, 10 rupees, for example. And especially the Cosmos L1 blockchains that have been built have the lowest gas fees. Some of them are like 1 cent, for example, 1 or 2 rupees, which is phenomenal in today's L1 blockchain world. And Cronos has still not resolved this factor, right? They're still built on the old system when they went live, and there's still the gas fees is like, and sometimes especially minting an NFT can take up to 60 cents, for example, like 60 rupees. So 5 CRO, 5 or 6 CRO, up to 5 or 6 CRO, especially like minted.com, for example. So hopefully the 2.0 addresses all of this head on, and this could also lead to more people coming and using Cronos from a gas fees perspective. So MMF, coming on to MMF 2.0, MMF also posted 2 important updates that are going to happen this weekend, probably going to happen today or tomorrow, I guess. And the main purpose of this is to improve the price of the token. That's what they're trying with all of these updates. And so the price of the MMF token, which had gone up more than $1 at one point of time, is now nearly 2 cents, and it's almost more than 95% that it has crashed as of today, 25th of September, for example. So, can this change the price of the token? That's what we're going to primarily talk about in the rest of the video today. So, summary of the changes. What are the main changes that they're coming with this 2.0 or V2, for example, right? So, first thing is the soft cap is going to be increased. They're going to reduce the emissions. They're going to deploy a product called veMMF, and then they're talking about V2 farms and V2 pools. What is the V2 farm and V2 pool, and what is MasterChef migration? Deploying MadMex, which is a new product for Cronos. MLP token. What is an MLP token? How does it generate revenue for the protocol? And especially, the last but not the least, the buyback for MMF. So We'll talk about all of this. So the first thing is Softcap Increase. So if you've seen my episode 1, I'll also give you a link for just for 5 minutes in the description. So from about 10 minutes to 15 minutes, I talked about with the fruit market as an example. What is market supply? What is circulating supply? What is total supply? And then what is the market capital? How does it affect the price of the token? So put it simply, right? If new money does not flow into the ecosystem, the price is highly determined by the market capital and the total supply. So if you have 50 apples that are costing $2, for example, the total money in the ecosystem is $100. Now suddenly you increase the amount of apples and you say there are 100 apples, then the price will come down to $1 if the money is the same. So that is what market capital and supply does to each other. Sorry. So when MMF said that they're going to increase the supply, this is what everybody was thinking about. So MMF, like most DeFi tokens, does not have a hard cap. Like Bitcoin, for example, have a hard cap of this many million tokens. That's it. You cannot mint any more tokens beyond that point. MMF had a soft cap, which means that by protocol it did not have a fixed number of tokens. And most DeFi tokens, like PancakeSwap's Cake, for example, they're all constantly minting new tokens with every block of the network. A block is one block time could be like, in Bitcoin it could take a few minutes. Ethereum it could take a few seconds. In Cronos, for example, it takes like 6 seconds on average. So they are minting new tokens every 6 seconds, for example. And Cake is doing that. Cake is one of the popular tokens in PancakeSwap or Binance Smart Chain. But where does this new MMF being minted go to? It's basically given as rewards to the farms and pools. And all of the DeFi tokens, MMF, Cake, VVS, everything is being minted because you need to incentivize people who are providing liquidity on top of just the swap fees alone. Because if you just ask people to give liquidity based on swap fees, it is not enough to cover the risk of impermanent loss. This is what we talked about in our episode 24, where you could get a reward using liquidity and you could get the fees that people are paying, but that doesn't compensate for an impermanent loss as a small provider in the liquidity provider. So MMF's current, in their initial roadmap, they said that 500 million is going to be a soft cap. Now today they are setting at about 445 million. Now if soft cap is enforced, that firms will all stop producing additional incentives and trading fees. But we are only at 440. When are they going to reach 500 is the question. So if you look at the current MMF emission is 90 MMF per Cronos block, which means that for every 5.7 seconds they are producing 90 MMF. So if you take that, and you can see this in the Cronos Explorer, and then you can calculate, and if you calculate this, MMF is producing about 1.36 million MMF per day, which equates to about 41 million MMF per month. So in another 40 days, you would actually reach this cap. You will reach 500 million if nothing else is done. So which is why it is important that take a proactive step, and that is what they've done. First thing, they've increased the soft cap, which means liquidity miners will not need to pull out. They'll still continue to get their earnings. They'll still continue to get a benefit out of it. But on its own, if they had just done that, it would have been a disaster for MMF price, and it would have crashed even further, and it would have probably destroyed the project. But the reason why it didn't is because people probably better understood some of the news that came along with it, which is the plan to make MMF deflationary in Cronos. So it is an extremely well calculated move and well thought out, I would say. And here is why. And the first thing they did was the emission reduction. So they are saying that along with this, when the master V2 farms come up, then the emission would be reduced from 90 MMF per block to 15 MMF per block, which means it's going to go down from 1.36 million MMF per day to 220,000 MMF per day. So roughly from 41 million to about 6.8 million, which is a drastic 80% reduction in terms of the MMF that is being produced every month. On its own, this alone would mean that we have another 6 or 7 months before which the soft cap is hit. So there is also a small proposed increase to 20 later when some of the other products are get introduced. But even then, it's still a 70% reduction in terms of the emission that is being done by MMF. So this is a fantastic initiative on its own. But along with it, they are introducing a few concepts which are trying to make MMF into more deflationary and into a locked perspective. So first thing is veMMF. What is veMMF? So veMMF is the concept of e-tokens is not new. So Trader Joe is probably the first L1 blockchain or the first decentralized exchange that I am aware of on Avalanche that they introduced this concept called veMMF, or more or less popularized it. Maybe someone else introduced it. You can, if you know, you can comment on the video. But they are the first ones, as far as I know, who introduced the concept of V tokens by introducing a VJO concept. And that's one of the staking products of Joe. This is a great article that is written. I'll give you the link in the description. And the reason I'm giving this link is because MMF hasn't yet released a full-blown version of what veMMF is. So I'm going to borrow some of the concepts of VJO here and the other decent exchanges where it's already live, and explain the veMMF concept. So as we don't have the full clarity, that's what I'm going to do. Some of it is based on the borrowed concepts of VJO. So there will be a lock staking form MMF which will give you veMMF. Essentially, you will have to lock your MMF and get veMMF. And once you have veMMF, it will allow you to get a boost on eligible forms. So it will also allow you to vote on future proposals for the platform, like external projects that would want to buy MMF, that want to put their project into MMF, could also lock their veMMF in MMF into veMMF, and they'll have a voting, and they can enable their liquidity pair using this voting. So a governance voting where people holding veMMF can actually decide what can be done and what cannot be done, also gives you a little bit of control. So that is also another use. But the main use that I see for normal investors would be having veMMF to boost their eligible forms. So let's see some examples and make it clear. First, see a small demo on how we can get MMF in the first place, veMMF in the first place. So you can access the veMMF option from the Earn menu. And if you go to veMMF, you can already see that it's live and you can log it, and there's a high APR at this point. This is going to drop as and when more people start putting their tokens into it. So you can first enable it, and then if you click on lock, you can see that it is asking you for two options. So the lock amount and the days locked. So if I start with 1000, for example, and then it's saying that the minimum is already 14 days. So if I lock it for 14 days, I get a very small amount of veMMF. For example, now only about 9 veMMF that I'm getting. So comparatively, if I change it to 365 days or 1460 days, which is 4 years, which is the maximum that you can lock into, you can see that I'm getting an equivalent amount of veMMF. So for 1000 MMF, I'm getting 1000 veMMF. So if I change it to 1 year, for example, 365 days, you can see that it is now 25%. So for every year, you get about 25% equivalent veMMF for your MMF that is getting locked. That is how the option is showing up. So I can just put it as whatever value that I want between 14 days and 1460 days, and you will get proportionate amount of veMMF based on what we just explained in terms of ratio. So I'll cover it a bit more with some examples, but this is what you get. And then if you click on confirm, you will lock your MMF and you will get your equivalent veMMF, which is showing up on your wallet right now. So as you've seen in the demo, when you lock your MMF, you have the option to lock it from 14 days to 1460 days, which is practically 4 years. And depending upon how long you lock it, you will get your veMMF proportionally. So as we've seen, if you lock it for 365 days, which is 1 year, you get about 25%. So if you lock 1000 MMF, you get about 250 veMMF. And then the more period that you lock into, you get more proportionate veMMF. So for example, if you lock it for the full 4 years, then if you lock 1000 MMF, you will get 1000 veMMF, you will get 100% of it. So there is a proportionate locking, and based on how much period you're locking, you will get your proportionate veMMF. So once you lock it, you cannot unlock it till the period is over. So if you're locking it for 1 year, that means that you cannot touch the MMF, you cannot trade it, you cannot use it, you cannot do anything with that locked MMF till that period is over. A lot of people do not understand the lock staking. In fact, they came back asking, okay, I've locked it, can I now go ahead and use it? You can't, because locking means that you're basically blocking it away. You can't use it for that. It's like a fixed deposit that you can't break. So that is what they are trying to do. And also one thing that I noticed is if you lock your 500 MMF, for example, for 4 years, then you can't lock another 500 MMF for a lesser period of time. Once you've locked it for whichever is the longest period that you've locked it for, the further MMF that you're locking, at this point, from what I've seen, you can only lock it for that period. So if you lock 10 MMF by mistake for 4 years, just to see how much you're getting, and then you're trying to lock like 10,000, 20,000 MMF, it is also showing the option only to lock it for 4 years. It doesn't show a partial locking. So think carefully before you do your first MMF period that you lock for. So now that you've locked the MMF, you will also continue to get MMF on top of it. Along with the veMMF, this is also a MMF earning form. Like you're having, if you go to the pools today, you will see that there is a stake MMF and an earn MMF option, which is like 40% MMF that you're getting. So it is very similar to that pool. So you're also going to be getting additional MMF on top of the staking that you've done. Along with the veMMF that you've got, this is also earning pool that you will be getting. So it's not that you've locked it and nothing will happen to that MMF. So there's also going to be accruing MMF over a period of time. The two differences are that in the current pool, you can unstake any point of time in the single staking pool, and you don't get the additional veMMF in the. So both are going to still continue as far as my understanding. So you can still, if you don't want to lock it, if you just want to earn MMF, you don't want the veMMF benefit, you are still able to do that. That's my understanding. Now that you have veMMF, I have 1000 veMMF, for example, what can I do with it? So like I said, you can vote for governance proposals. That's one of the fundamental use cases. But for a casual investor, the liquidity farm rewards will probably be the main attraction. So if you take a CRO USDEC, for example, the current APR in V1 today is 45%. With the V2 and the emission reduction, what it would mean is that it would reduce by more than 50-60%, which means that it could go up to 20-25% APR, for example. So, but if you are holding veMMF in your wallet from the above steps, then you can get a boosted APR and you can take it up right back to 45%, depending upon how much veMMF that you're having. So if this is your primary form and you had a lot of money in it, when by locking your MMF, you're able to still get the same APR percentage by getting the veMMF, which acts as a booster for all your farms. So this is one of the primary use cases. And if you go to the V2 forms are already showing up live, you can see that the APR is quite high. You see the APR is going to reduce, but we are seeing the APR is quite high. The reason the APR is quite high, like sometimes showing 3000%, 1000% is because people haven't started using these farms yet, or people have started staking into the farms, but not as much. And also they haven't started giving out rewards yet. It is probably going to start this weekend, either today or tomorrow. Once it starts and once all people migrate from V1 to V2, it will start reducing. As we've seen in the early days, in the early few minutes, in PancakeSwap, for example, you will see high APR and then it will start drastically going down as more and more people start putting their money into it. That's what is going to happen here. Eventually, the V2 farms are going to have a much lesser APR than their V1 counterparts. So the staking is already live for both the V2 farm and the V2 pools as of 23rd, 24th of September, but the emissions and rewards have not started. That will start as the migration begins. Now, a lot of people have asked the question, can I stay on V1? Can I not move? Not really, you don't have an option. The V1 farms are going to stop giving rewards in about 2 weeks, and everyone will have to unstake and move to the new V2 farms. When is this expected to happen? So today the V2 farms will probably start giving out rewards, and probably in another couple of weeks the V1 farms will stop giving out rewards. So you will have to unstake and move. There is no option for people to stay back on the V1 farm and get a higher APR. So you will probably see a point where both farms are active and you will have the opportunity to move over a period of time. Is it good news in general for casual liquidity miners who are not using the MMF ecosystem that much? It will probably be a drop in their APR, because where they were getting like 45-50% or 100% APR, it's going to drop down by more than 50% in my expectation. Long-term MMF holders who have been using MMF and been holding a lot of MMF tokens and seen their value erode could benefit from it, because now they can lock their MMF and get this veMMF and get the same liquidity mining rewards that they are used to. So that is what they're trying to do. They're trying to reward their loyal MMF customers by this veMMF. This is what Trader Joe also did, right? So will people be locking their MMF? This is again, a model that has been successfully implemented in most of the other DEXs. Even PancakeSwap, for example, they have a locked staking of their cake. When they introduced it first, I was very skeptical about it. But then when they started introducing the benefits and the use cases of the locked staking, now I have staked majority of my cake in PancakeSwap because the best benefit that you can get is IFO, for example. You get a lot more IFO allocation, because IFO used to be IFO was going down in PancakeSwap, but once the locked staking was introduced, PCS has substantially better IFO today, right now. So the allocation is a lot better. So the use cases will attract more and more people. So initially I was very skeptical about the lock staking, but now I have started using lock staking in many of the other protocols. So Trader Joe again saw a great response initially, but again in the recent times the whole Trader Joe and the avalanche market has been hit by the bear market. So it's not a true comparison, but then they did see a very good response initially. It even started a phenomenon called as the Joe Wars, which probably we'll talk about some other point of time. So how does it affect the price, right? First thing it does is it affects the volatility. So why is it important? So today, if you look at the MMF, how it's being used, 70% of the MMF of the 450 million is staked into either a pool or a firm. How do you see it? How do you calculate it? So if you see all the pools today where you can stake MMF and get reward out of it, you will see that about 112 million. If you add up all these MMFs, you will see that there is about 112 million of MMF which is staked into one of these firms. They are not locked, but they are staked into one of these firms, which is 25% of the MMF supply, and the rest of the 45% is locked into an MMF firm like CRMMF or whatever it is, right? BTC MMF, whatever. So of the 450 million, there's only about 30% of the supply that is being transacted on a daily basis or traded on a daily basis potentially. Now, obviously, someone can, it's not locked staking right now, right? So you can unstake and you can trade and you can stake it back. So there is probably going to be a small percentage of movement from those staking as well. But for argument's sake, let's say only the 30% is being traded on a regular basis. Now, the target is to go after this 30% and see if people can be rewarded for locking up that 30% of the stake supply. When you lock up a major portion of this free supply that is being traded on a daily basis, the volatility of the trading would reduce, and once you reduce the volume of MMF that is being traded on a daily basis, so much of MMF that is being sold on a daily basis on this unstaked supply, unlocked supply, then that is going to be by creating a utility which is the veMMF. That is where you are going to reduce the volatility, and the reduced volatility is going to have a price impact. So how much of this unstaked MMF from this 30% is going to be attracted into the locked veMMF staking is the question. If people move from the 70% which is already staked but not locked into the veMMF, it's not a true reflection. It is how much of this 30% of unstaked supply is going to be moved into veMMF. That is going to reduce the price impact. So again, these are all speculations and predictions. None of this is certain, but it's just a better explanation, a better calculation of what is happening in reality behind the scenes. And what is MadMex? This is a final component that is coming into picture. Actually, the two final components that are coming into picture. MadMex is basically a leverage trading platform. It's on the decentralized exchange. So leverage trading is either shorting or going long on an asset by predicting the price of the asset. You never actually buy the asset. You are basically trading on an asset based on your prediction of whether it's going to go down or going to go high. And you can actually, if you want to know more about what actually leverage trading is, I've explained the concept of shorting, where you're going short on an asset, in my GameStop special episode. So I'll give you the link to it. For about 5 minutes I've explained with a proper demo, and a lot of people came back and said that the first time that they've ever understood leverage trading is watching those 5 minutes. So you can actually go back and look at those 5 minutes, because it will give you a clear idea of what leverage trading is. And that's how leverage trading works, where you don't actually buy an asset, but you can trade using a leverage, and you can trade without ever buying an asset. So even on some of the centralized exchanges like Binance, Crypto.com, and so many other main centralized exchanges, leverage trading has got the huge volume than the spot trading volume. This is because a lot of traders who trade high volume take higher risk on a regular basis using leverage trading. And as a result, the fees is much greater than normal spot trading. I'll show you an example of that. And I don't encourage leverage trading. I've said this from the beginning of my videos. For a normal retail trader, leverage trading is the highest risk, and I've never done leverage trading, and I've never encouraged leverage trading as well. MadMex, for example, allows you to leverage up to 30x, and some central exchanges allow you to leverage up to 100x. The risk of getting liquidated is so high, which means that you could lose your funds in minutes and you're never in control. It's literally gambling. Now, a lot of people call crypto trading itself as gambling, right? As a risk associated. But then at least you can be patient in normal crypto trading. All of the things that I've taught is how to be safe in crypto and how to put safety over greed in crypto. That's what I've been explaining in all of my videos in the last 45 episodes, for example. And especially in episode 19, I've explained this more and more, saying that how you can be safe in crypto. But that's not possible in leverage trading. You're never in control and you can get wiped out. And just an example, I'm not going to do a demo on leverage trading because I've never done a demo on leverage trading and I don't teach leverage trading. But you can see in this example on MadMex IO where two things are there. One is like, I'm trading with about $40, 50 Matic for example, and I can trade up to from 50 Matic. I can go long up to 30x leverage. I can go up to $1,100, which means that if I execute this trade correctly, in a very very short time, I can go from $38 to $1,200. That's the power of leverage trading, and that's also the danger of leverage trading. So I can do a 30x leverage on MadMex, that is a product Cronos is launching. So, but if you see the fees on a $38 transaction, $40 transaction, the fees is nearly $1.1. If you compare that $40 transaction on a normal spot trading, 0.2%, it's negligible. It's about 10 cents or 20 cents is what you will get on a comparable trade. So, which means that the fees is much higher on a leverage trading. So you can see that the fees is much higher here. So this is how the leverage trading operates, and this is how much fees that the leverage trading attracts for an exchange, be it centralized or decentralized. In a centralized exchange, this fees will be even much higher. Being a decentralized exchange, the fees is actually a bit lower, but still compared to spot trading, it's so much higher. So this is why people who provide liquidity for a decentralized exchange operating leverage trading will attract much more fees or much more revenue. So the leverage trading as such will bring huge revenues. Currently, it brings huge revenues to centralized exchanges. But when a decentralized exchange is offering this leverage trading, they are able to offer it at a cheaper fees. But even with that cheaper fees, it is still so much higher that they are able to get a large revenue share for their platform and protocol if executed correctly. But if you provide liquidity using a traditional liquidity token pair, like how I explained in my episode 24, that if you're providing, like for example, CRO BTC, you provide equal amount of CRO, you provide equal amount of BTC. So if you're providing $1,000 of CRO, you need to provide $1,000 of BTC, which is a inefficient model in a leverage trading. Why? Because in spot trading, you're exchanging one asset to another asset. Both assets are in play. But in case of leverage trading, as you've seen, there are at most times there are no two assets. You're basically just leverage trading on just the value of one asset. You're either going short or long on just the value of one asset. So which means that the classic model of liquidity providing is not efficient, and the order book model of liquidity is not efficient in case of leverage trading, which is where the MLP product comes into picture. So instead of the regular LP tokens, liquidity provider tokens, where you're providing two tokens, this is where MLP as an index token representing the liquidity pool comes into picture, where you can just contribute one asset and buy the MLP token. So what is the MLP token? So currently on the on the Polygon ecosystem for MadMex, which is already live from MMF, the MLP token is an index token of 4 high volume assets. Bitcoin, Ethereum, USDC, Matrix. These are the 4 assets, and you can see the current ratio of the 4 tokens is not an equal proportion. It's not 25%, 25%, 25%. So it varies. So for example, USDC is making up nearly 45% of the token asset value, the ratio of the 4 tokens, and Bitcoin is about 19% and so on. But the utilization factor is, you can see that Ethereum is actually the highest used, about 14% usage. So the utilization and the weightage is not required to be the same. As long as you have sufficient values of the 4 coins, the 4 tokens, then that is enough. That is what they are trying to do. So currently, the MLP is there is about 11 million locked into, roughly about $11 million locked into the MLP pool. That is how much people have invested into this pool. So you can buy an MLP token by using one of the tokens. You don't need to buy all 4 tokens, all 4 coins. You buy using Matic, Bitcoin, USDC, or Ethereum into the token. So 30% of the platform fees is accrued back into the token value. 70% of the revenue goes to the platform. 30% of the platform fees, like how they are sharing your spot trading fees back to the liquidity providers as a benefit. If you provide liquidity into the MLP token, the first benefit that you're getting is about 30% of the platform fees. This is the spot trading fees. Usually in spot trading, when you're providing liquidity and you're getting benefit, without the additional incentive, that initial benefit is only about 10% roughly, or less than 10%, in fact, most cases. But here you can see that just 30% of the platform is going back into the MLP token. The APR is nearly 73%. That is how much higher the rewards are for providing liquidity into this MLP token. So over a period of time, the MLP is going to start accruing the value, and the 70% APR just from the trading fees alone is going to keep adding value to the price of this token, and it keeps going up. So that is your primary incentive for providing liquidity into the leverage trading platform of MadMex in the form of MLP token. But the trading fees alone, is not enough, right? So in general, in spot trading, we incentivize it further by allowing you to use the LP token into farming. Can that be done in MLP token? Yes, you can. So apart from the fact that you get 70% APR just from the trading fees of the liquidity providing, you also have the same option of using your LP token and farming it. So you can either directly go and stake single MLP and get an additional 46%, or you can use it to farm on a pair. Like the only supported pair currently is MLP MMF, but there could be additional pairs that could be created on later point of time, which means that there are two additional forms, and apart from the 73%, you can get an additional APR on top of it. This is a great product that was built on Polygon. But the Polygon MMF price crash meant that it has not attracted enough investors, as far as I can see. So that is what has happened in Polygon. That is the product that is coming. The MadMex and the MLP, both are not separate products. They are actually one combined product that is coming into Cronos. And why is it important? Because of this section of the article, that is where it is important. It is the most important in my opinion. What they're targeting first is that 20 million being locked into the MLP token on Cronos. So in Polygon, they've locked about 10 million. And because they made a new entry into Polygon, right? So 10 million was a huge volume for them. So if they are able to lock 20 million in Cronos, which means that it will attract huge revenue for the platform in general. And what they're saying is that they're going to get, so 30% of the revenue goes back to the MLP token. The rest of the 70% is revenue from the platform. What they've mentioned is that they're going to use this platform revenue of 70%, and they're going to be doing MMF token buybacks and burns. It's the first time that they've talked about performing an MMF token buyback and a burn, which is the base token of MMF platform, right? So this is going to be definitely phenomenal. If it can be executed to perfection, this is going to be perfectly phenomenal, because what it would mean is for the first time MMF will become a deflationary token, which means that more than the emissions you will be able to burn on a daily basis, and that would mean the supply would start reducing from that point onwards. And that is what being deflationary means. And this is going to be really key for the price traction of MMF. And on top of whatever utility you bring to the table, for a token to become deflationary is probably the best price to get, best option to get a price traction for increasing the price. Now, if they can execute it correctly, and if they get the 70% revenue from the $20 million, that's a significant buyback in today's price, and that could keep a sustained buying pressure on MMF, where today there is a sustained selling pressure on MMF. So this could reverse the trend, and that could result in the price action going upwards and upwards during a bear market. So a very carefully thought out plan, very well executed plan, very well. This is a team that is capable of executing a plan perfectly in previous cases that we've seen. But there's a big but coming, right? So there's always a but. It's taken me several hours to put all of this information. Obviously, they have explained it as carefully as they could, but it has taken me several hours to explain it in this video in a more explainable language, put more numbers to it, put more simplicity to it to explain it. So even though I had understood most of it immediately from their Medium articles, to put it into perspective and to make it clear, it took such a long time. And it's not something that I would expect an average investor to understand easily and appreciate. In the Tamil video I made, a lot of people have said the same thing, that they did not understand more than 50% of the context of what I have said in this video from their Medium articles alone, because to the best effort they've done the jargons and everything is a bit more technical, that it's harder to understand. So it's extremely hard for people to understand the actual facts and the reality, but whereas FUD and false facts can be easily spread. So if somebody starts to create panic just by saying that they're increasing the number of tokens, for example, without surrounding any of these facts, that is enough to cause a dump and panic in the market. So it's it's a wait and watch to see how much people start to understand it better and better. I had mentioned in my Polygon video that there is no DeFi product that has ever been successful in Polygon. In my experience, venturing into Polygon was probably a bad idea, is what I was thinking at that point of time. And a lot of projects have been killed completely venturing into Polygon. So this is why I mentioned that I'm not buying into MMF on Polygon. And you could see that the price crash on Polygon was quite rapid compared to Cronos. At least it took a long time to come down, but the price crash on Cronos was on Polygon was quite rapid. So even the Polycat NFT, the NFT from MadMex, it did not get minted out. Almost 3,000 NFTs were still remaining after 4 or 5 days, compared to the Cronos where it gets minted out in minutes, and MadMex enjoy quite a superior NFT market in Cronos, and they get minted out in minutes, but it did not get minted out even 4 or 5 days. So being on Polygon was probably a very hard move for MMF. It's going to be extremely hard for them to operate on two chains. Obviously, they learned a lot from Polygon launch. They launched MadMex, they launched MLP, they have technical knowledge from the launch and some of their tokens, but it's going to be hard to operate two tokens in parallel. And the biggest elephant in the room, they had not once talked about eliminating the Tom folks, which is what the biggest issue for MMF has been over the last few months, because there's been so many Tom folks that got launched. Some of the Tom folks went into big controversy, like Lion, for example, Scrub Finance, for example, and even now, some of these Tom folks, some of the investors do not see them as a value add, like MShare, SPN, HK, and then maintaining peg to MMF is always something that they are fighting behind the scenes. Instead, if they had concentrated on one core MMF product, it would have been a completely different story altogether. But having forked it into so many products, that is where it became a mess for MMF in the first place, in my opinion. But I'm still very optimistic about MMF, that they will survive for a few months with these positive changes. Personally, I would definitely go for MLP because it's a great product, and even though I will not be doing leverage trading, and I discourage normal traders to leverage, but if you decide to go for leverage trading, if you try to use it, then if you want to use a 5% discount code, I will provide my referral code in the description. You can use it for getting a discount on the trading fees. So if things go as per plan, just the fact that MMM is going to become deflationary is itself a good news for the long term. So even if the price doesn't increase massively, the supply, if it keeps reducing, at some point of time, it will be beneficial when we go into the bull run. So the price hasn't tanked with the headline news of the Softcap being increased, which is a good news for now, which means that at least some of the investors have understood what it has meant. And I've left one key point in this article, which is about MUSD, which is their stable coin that they're introducing. I'm yet to decide on this MUSD, and I don't hold any or intend to hold for now. So I'm still waiting and watching on the MUSD at this point. So hopefully this was useful to you. Hopefully this helped you better interpret some of the content that MMF had said and what V2 is all about. And this has taken me several hours to post this video. So if you can leave your feedback, that will be phenomenal for me. Thank you so much.